This is the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping our show on October 23rd, 2015. Our time is 8:44 Mountain. If you ever miss a radio show, we have them for you, and 24/7, you can listen online. The shows are archived on Harold's two websites, HESradio.com, rarecoloreddiamonds.com. We have a podcast through iTunes. Type in The World Financial Report on Radio. You will find us there. Our show is portable. We go on your portable device anywhere you do. Connect with Harold at rarecoloreddiamonds.com. rarecoloreddiamonds.com. 1-800-432-1022. That's 1-800-432-1022. We have a companion to our radio show. It's our free weekly newsletter. It's a must-read. You can go through it in 5 minutes, be completely up to date on the week, or spend hours if you want. You'll see the articles that we are seeing, and obviously it's going to give you the edge you need in profiting and protecting the money that you have in the financial markets. rarecoloreddiamonds.com, 1-800-432-1022. This week in the news, before we get to Harold's commentary, Justin Trudeau's Liberal Party secured a surprise majority win in our elections on Monday. Also, Wednesday was a dramatic day for Canadian drug company Valiant. The stock plunged around 40%, continued to go down throughout the week, accused of Enron-like accounting. Their executives are on a conference call this morning talking about their side of the story. And this was a real weird one. Deutsche Bank mistakenly sent a U.S. hedge fund client $6 billion when a junior member of the company's foreign exchange sales team processed a trade using a gross rather than a net figure. And some people were just simply aghast by that due to the fact that a junior executive could do that and it would not be flagged. Tells you a lot about the financial system. Also, Jack Lew, who is the Treasury Secretary in the United States, is saying he's worried about a financial accident due to the fact that the United States needs to lift their debt ceiling by November the 3rd, and nothing is happening yet. Big thanks to American firms from the Wall Street Journal. We don't want your cash. In fact, they're saying because of low interest rates, banks say that it's too costly to keep cash, and they're saying find somewhere else to go. Also, this is stunning. States in the United States are going after unclaimed billions, and we're talking about them going after neglected bank accounts, paychecks they forgot to cash, unredeemed life insurance policies, and the like. They're doing it because they're in such financial difficulty. Also, everyone forgets that 28 years ago on Monday, it was Black Monday, stock market crash of 1987. The stock market went down 22.6%. And one of the other stories that I thought was fascinating, rent in San Francisco is so expensive, it's cheaper to commute from Las Vegas, if you can believe it. And scientists say a 99% chance of a destructive earthquake in Los Angeles, 99.9%, and they say it's going to happen within the next 2.5 years. A very serious earthquake. Also, in Harold, this is a stunning story. We brought it to you, I guess it was about a month ago, but in Illinois, lottery winners may have hit the jackpot, but they still have not been paid. The state recently announced that it was not paying out any winnings worth more than $600 until its budget crisis is resolved, but it's still running TV ads promoting the lottery. An attorney representing some of the winners, Tom Zimmerman, has said there's a staggering $288 million in winnings that are waiting to be paid out. Absolutely stunning. Here you have states going after old paychecks and dormant bank accounts and insurance policies. And now they're not paying out lottery winnings. It's absolutely stunning, some of the things that are happening. Our featured diamond of the week. We believe in hard assets. Diamonds, gold, and silver in the environment that we're in right now. financially and geopolitically. Our diamond, featured diamond, is a 0.26 carat emerald cut, fancy, intense, orangey pink argyle. See it at rarecoloreddiamonds.com, featured diamond of the week. And Harold, I should remind everyone, next week, we'll be on at 11:30 in the morning on 6:30 CHED before the Edmonton Eskimos game. So we'll be on a little early. Instead of 3 on Sunday, on at 11:30 in the morning. And crazy week in the financial markets, but we do say to Harold Edward Siegel, happy birthday. Yes, it's a birthday weekend for Harold, so we hope you have an outstanding birthday weekend, Harold.
Well, thank you very much, Randy. I appreciate it. 62 years young and feeling really good. You know, it's funny that you bring up Trudeau, because 34 years ago when I left Toronto to come down to Florida, it was primarily because of Pierre Trudeau. At that point, there was a mail strike, and I happened to own a business at that point that depended heavily on the mail, and his comments were, any company that relied totally on the mail shouldn't be in business. And the mail strike happened, wiped out my small company that I had at that point, and that brought me down on my career, and coming down to Florida to clear my head, where I met my wife and, you know, got married, and it's been 33 years. So when Trudeau was brought into office, it was his father that 34 years ago, actually, you know, there was a massive mail strike in Canada at that point, and it really affected a lot of businesses, obviously, and certainly affected mine. But all in all, it was a crazy week in the market, but today, Friday, that we're taping the show, is probably the best example I could give you of all the references that I've made towards gold and the dollar and everything going on. When I came into the office this morning, and I'm looking at the price of gold, gold was up $12 at the opening. And I'm scratching my head wondering why in the world gold would be up $12, because the U.S. dollar is skyrocketing today, and it did yesterday. On Thursday, it's up 54, a half a cent today, 54 points, and it's just about to break the 97-cent level. So the fact is that the reason that they said gold was up $12 this morning was because China lowered their interest rates. Well, that makes absolutely no sense, because if China's lowering their interest rates, it means that their currency is weaker against the strong U.S. dollar. That's why the U.S. dollar is so strong today. So basically, I'm looking at it and going, this makes absolutely no sense. There is no reason in the world that gold would be up $12 based on China, you know, lowering their interest rates. 5 minutes later, the price of gold was down $5. It dropped basically $17 in just a couple minutes. And looking at the markets this morning, you're looking that the U.S. dollar is up 54 points. It's trading at 96.92. We're going to break the 97-cent level this morning. That means 3 cents further at this particular point puts the U.S. dollar at par, at an even dollar. I know that there are buy orders in the futures market above the par level that will send the price of the U.S. dollar skyrocketing, because the U.S. dollar is one of only a few currencies that is above par. I mean, that's stronger than all other currencies, British pound being the strongest, the euro, the Swiss franc, and the U.S. dollar. Every other currency is below all of those markets. So when you see a country lowering their interest rates or weakening their dollar, it's against the U.S. dollar, which is the reserve currency. So at this particular point, we have got the U.S. dollar skyrocketing. There's no doubt in my mind that the U.S. dollar is going to break par very soon. And once it breaks par, it's going to go to 107 to 109, similar prices that we saw when in the 90s when the currency was one of the strongest it's ever been. But also at that point, the Canadian dollar was heavily down. And that's what's happening again. Prior to the elections, the Canadian dollar came down to 1.29. 2 days later, the Canadian dollar is at 131.5. So you've seen a 2-cent increase in the price of the Canadian dollar, or a drop in the Canadian dollar, which is making it weaker. So again, the analogy that we've always given you, which is a strong U.S. dollar is negative for gold, has never been more proven than it is this morning, when the U.S. dollar was strong and the gold market absolutely fell out of bed after it actually hit the 1180 level. And the 1180 level, by the way, is the level that I've spoken about for months now as a resistance level in gold. If we had two strong closes above 1180, the next level for gold would have been 12, then 12 and a quarter. But that didn't really happen, and now 1180 is still a strong resistance level, and we're at a low today on the gold market at 1158.10 and a high of 1180. There's basically been a very strong difference of about $22 in the price of gold so far today. Silver's trading below $16. It's traded as low as $15.64. What we're also looking at, and I mentioned it strong last week, is that no matter what's happening, we know that the Dow Jones, that the U.S. stock markets are manipulated, and they're manipulated to keep the facade that everything is going great in the United States. But don't forget, we saw the Dow Jones drop to below 16,000, and the last 2 days the Dow has come up tremendously. We're sitting right now at 17,608. We're up another 119 points yesterday, but we're up over 300 points on Thursday. Again, my feeling is that the Dow is not reflective of the true U.S. economy, but because the U.S. seems to be doing better than almost every other country, the fact is that the Dow is rallying. I believe the Dow is going to 20,000. Not that I think that it warrants that, but I believe the Dow is going to 20,000 because it will paint a picture to the rest of the world that the U.S. is doing great again, and you're going to see a lot of business coming the U.S. way. But what we see happening in the market, I'm not changing my stance on whatsoever. I really don't care what happens in the Dow because I don't trade it. I have no money in that market whatsoever, and I suggest that anybody who has their money sitting in the stock market right now, your retirement funds especially, get out of it. Go on the sidelines, because there's no chance at this point here that the TSX is going to rally. Now with a weak oil market, which is down 67 cents today, we're trading at $44.71. Now, the crude oil market has been as high as $150. It's trading right now at $44.71, but every indication is that I see that oil is going down below $30 again. And I believe it's going to happen, fairly quickly. And that will push down the price of the Canadian dollar. So what I believe is going to happen, and I know that a lot of people disagree with me, but I've traded currencies for over 35 years. I believe the Canadian dollar is going down to 60 cents. I believe it's going to plummet based on oil dropping and basically commodities dropping, and I don't see the Canadian dollar as a strong currency for the foreseeable near future. So basically I've been suggesting very strongly to my clients to get your money out of the Canadian dollar and get it into U.S.-based investments that are not stock-related. And again, we can help you in that area. I've traded these markets for over 34 years. I know the currency markets as well as any of the top traders. I've traded them and called these markets for years, and in most cases have been very accurate. And I'm pretty positive on the fact that the U.S. dollar is going to break par, and it's going to skyrocket to the highs that we saw back in the 90s. And we're also going to see the gold market drop off. I think gold's going to drop to 1,000, possibly 950. Now, here's something that's extremely interesting and probably very, very important. That back in the 90s, when the U.S. dollar actually hit that 109 level, the gold market was at 250. This time, when we hit those levels, gold's going to trade at around $1,000, 400% higher than it was back in the 90s. And the reason for that is that there's a major difference between paper gold and physical gold. And the reason that I don't believe that gold is going to fall out of bed and drop substantially lower than 1,000 is primarily because of shortages in the gold and silver market physically. So the physical gold market is totally different than the manipulated paper market in gold and silver. And it's a real crime to see that this happens, Randy, because the fact is that the governments and the banks that are allowed to short the silver market, especially in the gold market, they're selling more gold and silver that actually exist in the world today. And that's criminal. But the fact is that the governments and the banks are in so much trouble. The fact is that the banks have never really recovered from 2008. I saw a report on General Electric the other day. General Electric prior to 2008 was an $85 stock and a phenomenal company. But when 2008 happened and the markets all plummeted, General Electric went down to $5. And now it's back up to 25. So, they're hooting and hollering and saying, great, General Electric's up 500%. It's up 500% from its lows. It is down, 75% from its highs. So it's all in the way that you look at things. I prefer to look at things realistically. And again, I do not get emotionally involved in the markets, because when you get emotional about the market, you'll always make a mistake. We don't trade gold and silver. We buy gold and silver as a hedge against all the bad things that are coming our way. There's going to be inflation. Right now, they say there's no inflation, but we know that that's not true, because the price of beef and the price of other commodities going to the table are substantially higher than where they were 5 years ago. So how in the world is there no inflation when certain prices of commodities have gone substantially higher? But at this particular point, inflation is not a major factor. What is a major factor is currency devaluations, and that's happening all over the world. So again, judging by what's happening in the markets, and especially what happened on Friday as we're taping the show, is that we've seen a massive turnaround today on Friday in the price of gold and silver. Gold was up $12 at the opening, then it proceeded to plummet right after that, after the traders realized finally that a stronger U.S. dollar is bearish for gold. And if the U.S. dollar is going to break par and go to 107 to 109, which I believe wholeheartedly that it will, then you better get some of your investments out of weaker Canadian dollars. And please understand, I'm Canadian, born and raised. Most of my businesses are still in Canada. Proud to be Canadian and proud of everything Canadian. I'm a big Blue Jays fan and Maple Leafs fan and everything Canadian. But in all reality, the fact is that the Canadian dollar is in huge trouble, and the reason for that is primarily because of the low price in oil, which is going to go lower, and the overall low price of commodities. So, again, gold was up $12, and just a few minutes after that was down $5 on the day. I do believe that a strong U.S. dollar is going to push the price of gold down temporarily to around the $1,000 level. Now, I still believe over the long term, and this is the reason that I will never sell my gold or my silver, is primarily because I do expect fireworks in the market. There's no way in the world that we are not going to see higher prices in gold and silver moving forward, and a lot of that will do with the currency markets, but a lot of it is going to do with the supply and demand situation in gold and silver, where there will be massive shortages, and one of these days the markets are going to wake up and understand the difference between paper gold and physical gold, and once you understand that, you will definitely be an owner of gold and hard assets like diamonds and art and rare cars and all that type of thing. So, again, if you've looked at your retirement savings plan, I can guarantee you that 90% of the people in Canada that have retirement savings plans has not made money in the last 10 years if your money is sitting in the TSX. There's just no way in the world that you've made any money. So what is the point of funding that type of investment when you're not going to make any money for it? There's much better investments than that, and I can show them to you. The fact is that I've hedged the Canadian U.S. dollar. I'm selling my diamonds right now in Canadian dollars because I want my clients to make a lot of money. So that means that you're up 30% immediately because we're allowing you to buy our commodities, mostly diamonds, in Canadian dollars and putting our clients in profit by 30% as soon as they make the purchase. So again, at this particular point, you've got to watch the markets that are going to determine your net worth. And the fact is that the lower the Canadian dollar goes, and I do suggest to you that Canadian dollar is going to fall substantially further, get some money out of that market and call me, and I'll show you where to put your money that is safe and reliable, and you'll make substantial returns without the risk that you have in any of these other markets that are manipulated. So, again, Randy, today was a perfect example of what happens when currencies get devalued and the U.S. dollar strengthens, and we're seeing it in the gold market today.
Speak with Harold personally, privately, about your situation. 1-800-432-1022. 1-800-432-1022. RareColoredDiamonds.com is the website. Our featured diamond is a .26 carat emerald cut, fancy intense, orangey pink argyle. Now, the argyle pink tender is up as of October 21st. So we should have some results very soon on the Argyle Pink Tender, which is very positive. Now, one of the things we're going to have in our second part of the show, a 75-carat yellow diamond sold for $3.6 million at Christie's. Also, Sotheby's had a magnificent jewels and jadeite sale October the 7th in Hong Kong. And we have auction results. They are outstanding. And if we, whatever you do, hard assets, gold, silver, diamonds, speak with Harold about our featured diamond, a .26 carat emerald cut, fancy intense, orangey pink Argyle. It was interesting this week, interesting interview. Greg Hunter interviewed Axel Merck, and he said negative interest rates for the next 10 years. He believes buying hard assets for that period of time, buy gold. Money manager Axel Merck says you simply must own physical gold in this risky environment. He explains, many people say, why invest in a brick that doesn't pay interest? When you look at cash paying negative interest rates on a real basis after inflation, then a brick doesn't suddenly look so bad anymore. I would allege the Fed is all but promising to be behind the curve. Even if the Fed is trying to raise rates, emphasis on trying, they will be behind inflation. Yes, they will raise rates, but net inflation, real interest rates, are going to continue to be negative. If I look out a decade from now, I don't see how the United States, Europe, Japan, or any other country can afford positive real interest rates. Now, he talked about the stock market. He said, expensive and way overdue for a bear market, even with the recent rally we're in, and he thinks the market can crash. What the central banks have been achieving in recent years is they have been breeding complacency. When volatility is low and prices are rising, what could possibly go wrong? Buy stocks. What has happened instead is, instead of buying the dips, people are now going to sell the rallies. We've had these amazing rallies, and that is exactly what's happening in a bear market. With rates going above zero, risk premiums have to rise. This means this has to come into the marketplace in the form of fear and volatility. But Axel Merck saying, and he's a specialty, he's really an expert, his specialty is currencies, negative rates for the next 10 years. He's recommending hard assets like gold. Find out more about buying hard assets, diamonds, gold, and silver. Speak with Harold Siegel, 1-800-432-1022, 1-800-432-1022, or connect with Harold at rarecoloreddiamonds.com. Don't forget, next week our show, normally we're on at 3 in the afternoon on CHED. We're going to be on at 11:30 in the morning before the Edmonton Eskimos game. The Eskimos are playing the Alouettes. This week it's the Riders, and then we play the Alouettes. We'll be on before the show at the pregame show with David Morley, 11:30 in the morning. Keep that in mind. Second half of the World Financial Report on radio with Harold Siegel and me, Randy Marshall, right after this. Welcome back to the World Financial Report on radio with Harold Siegel. My name is Randy Marshall. Joining us by the telephone, our financial and diamond expert, Harold Siegel. We're taping our show on October 23rd, 2015. Our time is 9:08 Mountain. Don't forget, our show runs on 6:30 CHED in Edmonton, Sunday afternoon at 3. Next week, we're on before the pregame show. The Eskimos playing the Montreal Alouettes. Game time is at 2. We're going to be on from 11:30 until 12:30. And then the pregame show with Dave and Morley. Keep that in mind next week. Connect with Harold at rarecoloreddiamonds.com. rarecoloreddiamonds.com. 1-800-432-1022. That's 1-800-432-1022. rarecoloreddiamonds.com. Our featured diamond of the week is a .26 carat emerald cut, fancy intense orangey pink Argyle. The Argyle tender results should be coming out here in the next week or so, as the Argyle tender ended on the 21st of October. So we will have more information on that in the days ahead. One of the other big stories, and this is a big one, 75-carat yellow diamond brought in $3.6 million at Christie's. And they were estimating anywhere from $3 to $4 million, brought $3.6 million. And Harold, we'll get to your commentary, but after that, we will promise to run through some of the auction results from Sotheby's Magnificent Jewels and Jadeite sale, October the 7th, 2015 in Hong Kong, China. And they are stunning. In fact, to give a little sneak preview, lot 1731, an impressive, fancy, vivid yellow diamond ring. And it weighed 41.65 carats. The estimate on it, 1.9 to 2.3 million. It sold for $3.6 million. The auction results from that auction were outstanding. Now, next week, we will have the auction results from Christie's sale that happened earlier this week. But great news in the diamond world, Harold.
You bet. And the results from that auction were phenomenal. Just very, very pleased with them. But again, the worse the economies get, the worse the currency markets get, the astute investors look for other alternative investments. And that's what we're into. We deal in alternative investments. Alternatives meaning not stock and bond and paper related. So we deal much more in physical assets you could hold on to that you own, and if you need them, they're there for you, as opposed to paper that we see can go to zero. So, again, the featured diamond this week, all you have to do is look at it and see how beautiful that diamond is. First of all, it's an emerald cut, which is one of the rarest and most difficult cuts to cut. It's by far one of my favorites. On top of that, the color of that diamond is outstanding. It's an amazing-looking diamond. And it's an Argyle. So the fact is that the Argyle mine is going to close within 5 years. There will not be any more pink diamonds to speak of. They produce 95% of all the pink diamonds in the world, and we anticipate that the price of pink diamonds are going to continue to skyrocket. In fact, a year or two before the mine actually closes, we anticipate the biggest moves coming in that market. And then on top of that, we anticipate that we are also going to see, after the market closes and all the diamonds run out, we predict that we're going to see, in some cases, like on the vivid pinks, we believe the market could go up as much as 500 to 1,000%. So, again, we're just ecstatic about what's happening in the diamond market. It's extremely important, and one of the major reasons why you want to own diamonds is because for protection and for currency protection. Look what's happening in Canada with their currency dropping by about 30% over the last few years. The clients in Canada that bought diamonds a few years ago are actually up substantially just on the currency alone, let alone how much their diamond has gone up. So the currency plays a huge role in the diamond market and in the markets like that. So we're just ecstatic about what's happening in the marketplace. We're recommending very strongly to get out of stocks as the markets get more and more volatile and get into diamonds. Yellow flawless diamonds, they can increase by 15% a year. You see what's happening, and you're going to see further as we talk further about how much yellow diamonds have gone up at auction. It's unbelievable. It's a phenomenal, phenomenal thing. So, again, we're just ecstatic about what's happening in the diamond market. On top of that, we hedged the Canadian-American dollar, knowing that the U.S. dollar is going to increase substantially and the Canadian dollar is going to fall. And seeing that most of my clients, or a lot of my clients, are in Canada, we wanted to make certain that our clients are able to take advantage of these situations, because the stronger the U.S. dollar goes and the weaker the Canadian dollar goes, it becomes more difficult for Canadians to buy these type of markets. So all we're saying at this point is we will sell our magnificent diamonds that are normally priced in U.S. dollars. We will sell them in Canadian dollars, and the only reason that we can do that is primarily because we hedge the Canadian-American dollar. Now, if I was greedy, I could just keep that money for myself and my company. However, we're not. We want our clients to do well, and the better our clients do, the better my company does. So what we have decided to do was to turn those profits over to our clients, and that's exactly what we did and what we will continue to do. So you can actually buy any of our investment quality diamonds, you can pay in Canadian dollars, and you're going to be immediately in profits by 30%, because diamonds are priced in U.S. dollars at this time. Now, again, we will also have the opportunity, because we own a company called 8 Seagull Fine Auctions, and we built 8 Seagull Fine Auctions in order for our clients to be able to sell their diamonds down the road at auction. And that's why we built a secondary market for that to happen. So at this point, we are saying to get out of the risky stock markets and paper markets and get some money into diamonds that will give you the potential to make a strong profit and get you out of the risky markets like the stock and bond markets. So again, Randy, at this point, we're just ecstatic about the results from the auctions. And again, we will resume our auctions going into the first part of next year. A lot of our clients, especially in Alberta up in Fort McMurray, because of the low prices in oil, they're having some issues up there. So we intend on having some auctions fairly soon, and we will broadcast to you when that is going to happen.
Featured Diamond of the Week from rarecoloreddiamonds.com, a .26 carat emerald cut fancy intense orangey pink Argyle. We know the Argyle mine is shutting down in the next 5 years. We also know that that will mean that all the diamonds coming from that mine, 90 to 95% of the world's pinks, are gone. And then everything will be in the secondary market. As I mentioned earlier, we had auction results, and we will have full auction results from Christie's auction this week. But the big one, a 75-carat yellow diamond, brought in $3.6 million. Now, a little earlier in the month, Sotheby's Magnificent Jewel and Jadeite sale, October 7, 2015 in Hong Kong, China. They had what was, we felt, a very impressive auction for those that are invested in colored diamonds. Amazing results. If you'd like to see them, connect with Harold at rarecoloreddiamonds.com or call 1-800-432-1022. Ask about our featured diamond, the .26 carat emerald cut fancy intense orangey pink Argyle, and get the auction results from Harold. As I mentioned, lot 1731, impressive fancy vivid yellow diamond ring, 41.65 carats, estimate 1.9 to 2.3, sold for $3.6 million. Now there was lot 1852, an exquisite fancy intense blue diamond and diamond ring. And this was just a beautiful, beautiful diamond. You can see the picture if we send out the info to you. The estimate on it, $877,000 to $1 million. It sold for $1.8 million. Also, a lot 733, fancy yellow diamond and diamond pendant. And the diamond weighed 45.88 carats. The estimate on it, $360,000 to $451,000. It sold for $1.3 million. All the money that I'm mentioning, U.S. dollars. Lot 1824, and this was, and I said to Harold, this really was one of the most beautiful rings I have ever seen. Fancy pink diamond and pink diamond ring, simply set with a heart-shaped fancy pink diamond, and it was just unreal, weighing 3 carats. And this was just a beautiful diamond. The estimate on it, $258,000 to $322,000. It sold for $877,000. There was lot 1853, vivid yellow diamond and diamond ring. The estimate on it, $700,000 to $800,000, and it sold right within its range of $784,000. And one of the things that we find, and Harold and I have spoken about this before on past shows. Sure, we talk about the big $1 million diamonds. We talk about the diamonds that are selling for hundreds of thousands. But then there's the diamonds that are selling for $50,000, $60,000, $70,000. And those are the ones that seem to be doing very well at auction. In fact, to give you an example, lot 1803, a fancy, intense yellow diamond and diamond ring. The estimate on it, $36,000 to $49,000. It sold for $61,000. Lot 1636, fancy yellow green diamond, pink diamond and diamond ring. The estimate on it, $64,000 to $83,000. It sold for $112,000. We also had a lot 1688, fancy intense yellowish green diamond and diamond ring. The estimate on it was right around $100,000, and it sold for $120,000. I think you're getting the idea of what we're talking about. With this auction, everything was well above what they had originally projected the estimates to be. And some of those lower priced diamonds did very, very well. And Harold, this was one of those auctions that we can really hang our hat on and say, this is why we're recommending hard assets like diamonds. We're seeing, even in tough financial times, we are seeing very nice prices.
You bet we are. The thing is that there's several reasons to own diamonds. Obviously, profit and protection is one of them. But the fact is that the good people of Greece, when they were having their issues, and they still have them, the fact is that if they had a diamond and the banks had they wouldn't be in anywhere near the trouble that they were in. They could have crossed the border. They could have cashed their diamonds in, whether they profited or not from them. The fact is that they could have at least been back in the game. They would have had money in order to be able to get through these difficult times. So, again, we're just concerned about the currency markets. The currency markets are changing every day, but diamonds could be sold in any other currency. They're portable, transferable wealth. Everything about the diamond market is good, and again, it's a great way to sustain your money. The problem is that it's not a short-term investment. You don't want to buy diamonds and sell them in a year or two. You're just not going to make any money with them. The idea behind owning a diamond is to hold on to it, number one, and give it a chance to appreciate in value. It doesn't trade on an exchange like gold or stocks or anything like that. It's something that over the longer term will just continue to increase in value, especially as it gets more and more rare. So, again, hold on to a diamond for the longer term, and you're going to find that the returns you're going to get are going to be extraordinary. I've talked many times about the diamond that I bought back in 2003, a 2-carat vivid purplish pink argyle that I paid $350,000 for, that is worth over $3 million today. About my wife's girlfriend, who inherited a 5-carat pink from her grandmother, who 50 years ago bought the diamond for $50,000. Today the diamond's worth $5 million. There's countless stories like that, but there's no stories about people that bought a diamond and sold it 2 or 3 years later and made a fortune. It really doesn't happen. It's a longer-term investment that you put away. You put it away in your safety deposit box. In fact, what I've done for my grandchildren is put away diamonds in their portfolio. They have no stocks, they have no bonds, they have nothing like that. Those are not the type of investment that I would ever make for the people that I love. My grandchildren, who are dear to me, I want to make certain when they are ready to get started in this world, they have something substantial. So again, I put diamonds away for them, yellow flawless diamonds, argyle pink diamonds, and by the time they get into the late 20s, early 30s, and they're ready to make their mark on the world, they have something of value, not a stock like General Motors, for example, in 2008, that went to absolutely zero. So again, it's a longer-term investment. In fact, if you invest in diamonds and you don't need the money for your retirement or whatever, these are the type of assets you want to pass down to the family. That's where tremendous wealth will be built.
Well, Harold, you talk about losing wealth with the pullback in Valiant stock, and that's a big one here in Canada. Hedge fund manager Bill Ackman, his accounts lost $3 billion. A lot of money. So keep that in mind as you invest. Obviously, the stock market, yes, you can make money, but it can go away as quickly as it came. Connect with Harold at rarecoloreddiamonds.com. Wondering about today's economic environment, geopolitical environment, what should you do with the money that you have? Obviously, we're recommending profit and protecting, and that is with hard assets, gold, silver, and diamonds. Connect with Harold, 1-800-432-1022, rarecoloreddiamonds.com. rarecoloreddiamonds.com. Our featured diamond of the week is a .26 carat emerald cut fancy intense orangey pink argyle, a great diamond to start a portfolio with. And if you are joining us a little later in the show and you missed it off the top, there was a story in our free weekly newsletter that you can get from Harold. But it really shows why you should have hard assets in your portfolio. In the United States, states are patching budget holes using residents' forgotten bank accounts, stocks. When Americans lose track of money in old neglected bank accounts, paychecks, they forgot to cash, unredeemed life insurance policy, and the like, state governments are now increasingly aggressive in taking control of that cash. And one of the reasons they're doing it is you're finding that they're trying to patch budget holes that are gaping. And we've talked about it on the show in the past that in a lot of cases, most states are well underfunded in their liabilities, their promises that they've made for pension plans. So no wonder why they're going after this money. And one of the other stories we touched on in a past show about a month ago, in Illinois, things are so bad. And we've said this is a bankrupt state in the United States, and it really is. Lottery winners that have hit the jackpot have not been paid. They're not paying out anything over $600, if you can believe it, due to budgetary crisis problems. In fact, a lawyer is suing them on a class action basis because $288 million in winnings is waiting to be paid out. Harold, that's the environment that we're in today. That's the environment. People need to know they need to protect themselves with hard assets that they can hold in their hand. Something that
that's
cannot...
really sickening.
Oh,
Randy.
it is. It is.
The chances of ever winning a lottery are slim to next to none. And then you actually win it and you don't get paid on it. It is unconscionable to think. And to think that the banks are going to steal this money. You know, I live in the United States for 8 months out of the year in Florida, but I also have a home in Colorado. When I went to Colorado in June, I went to the bank that I deal with, and I went to withdraw some money, and my bank account was frozen because I had not used it for a few months. That's what's scary, and that's what's happening in Greece. People couldn't even get their money out of the bank or out of an ATM machine because the ATM machines were all empty and the banks were closed for 2 or 3 weeks. This is what's happening around the world. This is why you don't want to keep your money, all your money in these institutions. On top of that, you've got the insurance problems, which means that if you keep more money in the bank that the insurance is going to pay you back, you could lose the money that you have in there. So these are crazy times. You know, the stock market in the United States will not warrant 20,000, but it's going to hit it anyways because it's a manipulated market. A lot of the things happening in the world right now and a lot of things happening in North America are very concerning. And a lot of the things you brought up today, Randy, with the banks taking insurance and dormant bank accounts, and they do it because they can. Who's going to fight the government and who's going to fight these banks, you know, when they're stealing our money like this? So that's why you want to have some of your assets hidden in the type of assets like diamonds that nobody in the world knows that you own. It's never been more important than it is right now. And again, we are going to make it very simple for our Canadian clients who we love dearly. We are going to allow you to buy our diamonds that are priced in U.S. dollars in Canadian dollars because we hedged the Canadian-American dollar, and it will actually allow you to be up 30% because that's what the currency difference is as soon as you buy the diamond. One of the diamonds you should look at is the featured diamond of the week. It's one of the most beautiful diamonds you'll see. And again, as soon as you buy that diamond, you're already in profits by 30%.
Featured diamond is a .26 carat, emerald cut, fancy intense, orangey pink argyle. See video of the diamond, see a picture of the diamond at rarecoloreddiamonds.com, featured diamond of the week. And definitely get our auction results from Sotheby's Magnificent Jewels and Jadeite sale. The auction results were amazing. We also have a story this week on that 75 carat yellow diamond selling for $3.6 million at Christie's, and we will have further auction results next week from that auction. But we are seeing art prices doing very, very well. Hard asset. We're seeing diamond prices doing amazingly well. Hard asset. Even handbags are selling very, very well. And we know collectible cars are selling for record prices as well. In fact, someone is selling a Ferrari for $9 million, a Tomasina, and this is on eBay for $9 million, 1967 Ferrari. And Harold, just another indication that hard assets, that's where people are putting their money today.
And very smart of them to do so. Last night, I was surfing the channels and I saw Jay Leno's new show on Jay's Garage. He's got a collection of cars that defies description. And he had 3 cars there. One was a muscle car, a U.S. muscle car. One was an Italian car, and one was a Packard. And Jay asked the question, over the last 5 years, which one of these would have gone up the most? The American muscle car went up 33%, the Italian car went up 100%, and the Packard went up in 5 years 360%. Again, these are all hard assets. These are the type of assets that you want to own, along with the fact that they're fun. You know, you can't wear a stock certificate around your neck, as Randy always says, or on your finger, but the fact is that you could put a beautiful diamond on your wife's finger or on her ears or around her neck, and as she's enjoying that, that could go up tremendously in value. It's the same as a guy buying a beautiful Corvette back from the 60s or whatever. He can enjoy it as that is going up tremendously in value. So these are the type of assets that we are recommending to you. In fact, going into the new year, we're going to have some of the most amazing auctions on H. Siegel Fine Auctions that will include not only diamonds, but rare cars and art and all the type of things that you want to own. So we're very excited about what the future is for the hard asset market. And again, we're totally shying away from the paper asset market.
And we're starting to see numbers, financial numbers coming out that are really starting to point towards the United States economy rolling over. In fact, one of the charts we have in our free weekly newsletter, rail car orders, biggest drop since the 80s, hints at U.S. slump. North American rail car orders plummeted in the most it has in 27 years as railroads shipped less oil and sand used for drilling, added to a concern over a U.S. industrial production slowdown. Third quarter orders for new freight cars plummeted by 83% from a year earlier. And they're saying that's the biggest decline since 1988 and the lowest number for a quarter since 2010. And they say a healthy number is 10,000 to 15,000. So when you see rail car numbers and orders going down, a sure sign that there's trouble with the United States economy. One of the other stories that was quite stunning is from Zero Hedge. We know McDonald's, obviously they're trying to reinvent themselves. They're offering in the United States, not Canada yet anyway, breakfast all day. They did a survey, and this is what was said by one of the owners of a McDonald's. We are in the throes of a deep depression, and nothing is changing. That according to a franchise owner who wrote in a response to a financial survey by Nomura Group. They went on to say probably 30% of operators are insolvent. One owner went as far as to speculate that McDonald's is literally facing its final days. You know, stunning. You know, Harold, who would have ever thought cabs would be displaced? And along comes Uber, and suddenly you have cab companies in trouble. And now, you know, you have a lot of competition in the fast food market, and look at McDonald's. They're in a lot of trouble financially. And this is why we advocate hard asset, diamonds, gold, and silver. You own a stock that could be worth a lot today. Tomorrow, it's worth nothing due to what's happening in the marketplace. But the thing about gold, silver, and diamonds, they have stood the test of time. And Harold, we have about 30 seconds.
Yes, they certainly have. You know, the thing with McDonald's the other day, by the way, was that their stock plummeted, then skyrocketed right after that. And again, that is not conducive to, unless you're an out-and-out speculator, you know, to making money. The fact is that we don't want to be in those volatile markets, especially with your retirement fund. So again, I'm very comfortable the way we are right now. I think that hard assets are definitely the way to go. Own some assets that are under the radar, that nobody knows that you own, that are not traded on exchanges and cannot be stolen from you, like your bank accounts and insurance policies and things like that. So, again, the gold market physically, the silver market physically, physical diamonds, that's the way to go. Again, you can buy our diamonds in Canadian dollars because we hedge, and we only want our clients to make money. So I want to wish everybody a wonderful weekend and a very profitable day.
Have a great happy birthday weekend, Harold.
Thank you very, very much, Randy. I truly appreciate it.
Don't forget, next week we're on at 11:30 before the Eskimos game. The pregame show with David Morley, 11:30 next Sunday. Connect with Harold about our featured diamond, a .26 carat emerald cut, fancy intense orangey pink argyle, rarecoloreddiamonds.com, or call 1-800-432-1022. That's it. Another edition of the World Financial Report on Radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.